Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news. Hong Kong is gripped by an unusual stock market frenzy, up 6.6% on the day. But first, US mortgage applications fell slightly last week after the best 2 consecutive weeks previously. The benchmark mortgage interest rate was unchanged and still at a recent low. And this weekend, New Zealand time, we get important September non-farm payrolls report in the US, and that is expected to show 130,000 more jobs added in the month. Today, the precursor ADP employment report came out, showing a rise of 143,000, which was more than the 90,000 anticipated. And their August data was revised higher. There is good job creation in both the factory sector and the service sector reported in this ADP data. And Japanese consumer sentiment improved again in September, the 4th straight month of gains. However, it isn't yet back to levels they had at the beginning of 2024. In Singapore, there was an unusually weak PMI result released overnight. Apart from the pandemic period, it fell to a record low in September and is now in a deepish contraction. In Hong Kong, a wild stock market frenzy was underway yesterday, overwhelming brokerages with buying demand. Oddly, it is mainly about the expectation that the Chinese housing market will return to its old self and buyers will emerge to allow that. But that seems to be in the face of troubling demographics and recent memories of steep losses for buyers. And the latest data still shows continuing steep losses for second-hand housing, continuing a 29-month trend. Maybe yesterday's Hong Kong rally was just FOMO. One thing is for certain, though, the Beijing government is going to print huge amounts of money to try and make a recovery happen. And there will be winners, just not sure property will be one of them. But the price of key construction materials like zinc, iron ore and steel rebar are rising. The focus now turns to the late October National People's Congress meeting and decisions to see if there really is a workable way out of their structural problems. In Australia, the widely watched local PMI by the Australian Industry Group saw its factory PMI dive to its worst level ever. It was far worse than was expected. Low order levels, while inflation and labour pressures persist, are making manufacturing there very tough. This AIG report pretty much mirrors the earlier S&P market version. The US Treasury 10-year yield is now just on 3.78% and up 3 basis points from yesterday. The price of gold will start today at $2,650 an ounce and down $20 from yesterday. Oil prices are down $1 too, at just on $70 a barrel in the US, while the international Brent price is just on $73.50 a barrel. Turns out American inventories are high, so demand from this source won't be strong. And the Kiwi dollar starts today at 62.7 US cents and down a minor 10 basis points from yesterday. Against the Aussie, we're 40 basis points lower at 91 Australian cents. Against the euro, though, we're unchanged at 56.8 euro cents. That all means our trade-weighted index starts today at just under 70.3 and little change from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.